Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit in Equities. Now if you like our content, please don't forget to hit the like button. Also subscribe to our channel and click on the bell button to receive important financial updates at the earliest. Now today we talk about a stock which HDFC Securities has labeled as a hidden gem of a business. Now this company is a duopoly business with high entry barriers, and in times like this when there is a lot of wealth destruction in the markets, it would do well for us to go ahead and monitor the stock and buy it when the levels become very attractive. Please watch this video to know more. Now the company in question is Central Depository Services India Limited, which is available at 283.95, and the target price here has been set at 425. The price when the stock was initially recommended was 289. The symbol for it is CDSL. Now Central Depository Services India Limited operates as a security depository in India. The company offers services for a range of clients such as depository participants and other capital market intermediaries. The company offers dematerialization for a range of securities including equity shares, preference shares, mutual fund units, debt instruments and government securities. Now you will see that post listing the stock went on a huge spike, but since then has largely been consolidating, and of late there has been some sort of a downtrend. The market cap of the company is 2,967.28 crores, which means that the company is a mid-cap one. The EPS is 9.65, translating into a very cheap price to earnings ratio of 29.52 compared to the industry PE of 64.06. The book value is 50.87, translating into a price to book ratio of 5.58. The dividend yield is 0.88, whereas the promoter holding here is low at 24%. The 52-week high for the company is 486, whereas the 52-week low is 243.15. Now, among other points, HDFC Securities highlights that the business should command higher multiples because it is less cyclical in nature versus exchanges, and here they have mentioned MCX and BSE, and also with respect to brokerages like ICICI, they assign a P multiple of 33 cross, which is 10% premium to MCX. They say that at a P multiple of 24 times FY19 and 21 times FY20 earnings, value is imminent, and this stock merits a buy. They initiate coverage on CDSL with a buy rating and a target price of Rs 425. Now friends, please don't just jump in. Please go ahead and do your own research, and if you are benefited by the content of this video, please don't forget to share this video. Also, if you have not yet subscribed to this channel, please go ahead and do so that you can get the latest financial updates at the earliest. Thanks for watching, and we will see you soon with another video.